Hey everyone, and welcome. Today, we're diving into a really provocative theory about our global financial system. It comes from a book and documentary called The Great Taking, and it basically claims there's been a plan in the works for decades to legally, yes, legally, seize your assets. So let's break down exactly how this is all supposed to work.
So let's just get right to it. Let's start with the central and, yeah, pretty alarming question that this whole theory is built around. What if the entire financial system, the one we all depend on, was intentionally designed with a kind of hidden backdoor, a way to transfer wealth away from all of us during a major crisis? And here's the core claim. This isn't some potential threat in the distant future. The argument is that this legal framework is already built. It's been put into motion piece by piece over decades. The whole idea is that the very definition of what it means to own something has been quietly changed to make a massive seizure of assets not just possible, but perfectly legal.
Okay, so how on earth could something like this even be possible? Well, according to the theory, it all started with a fundamental shift in how we own things. It's a process that began decades ago, and on the surface, it just looked like a simple, convenient technological upgrade.
It all begins with this word, dematerialization. We used to have actual physical stock certificates, a piece of paper you could hold in your hand that proved you owned a piece of a company. The theory here argues that when we switched over to digital records, it wasn't just for convenience. It was a fundamental legal change to the very nature of ownership itself.
And what's really fascinating here is the timeline they lay out. This wasn't some single event. It was a slow, deliberate process. It started way back in the 60s with getting rid of paper certificates. That was followed by these quiet, under-the-radar changes to commercial law, state by state. And it all supposedly culminated in this crucial amendment to U.S. bankruptcy law in 2005, something called safe harbor.
And this, right here, is the alleged result of all those legal changes. You no longer have direct ownership of your stocks or bonds. Instead, you have something called a security entitlement. Now, the source is really, really clear on this point. This means your investments are no longer your direct property. What you hold is simply a contractual claim on them.
And this slide just breaks it down perfectly. Look at the left side, direct property. Simple. You're the legal owner. You might have physical proof. But look at the right. With the security entitlement, you just have a claim. The intermediary, think of a clearinghouse like the DTCC, is the actual legal owner. All you have is a digital line item in their giant pooled account.
So, okay, if our ownership has been redefined like this, what's the actual mechanism for the seizure? How could your claim on your own assets just disappear?
Well, according to this theory, all those pooled assets don't just sit in some digital vault collecting dust. They're all held at these massive central clearinghouses, like the DTCC. And here's the kicker. They're allegedly used as collateral for the gigantic high-risk derivative bets being made by the world's biggest financial institutions. This brings us to that safe harbor provision from 2005. The source basically calls this the kill switch. It says that if there is a major bankruptcy event, the secured creditors are legally allowed to immediately seize all that collateral. No courts, no due process, no questions asked. They just take it, even in cases of fraud. So the big question is, who are these secured creditors who get to swoop in and take everything in a crisis? Well, the theory is crystal clear. It's not you. It's not the individual investor with the security entitlement. The secured creditors are the huge banks and financial institutions at the very top of the food chain. You're at the absolute back of the line. Okay, I know that was a lot to take in. It's some heavy stuff. If you're finding this explainer valuable, please just take a quick second to like, share, and subscribe. That way you won't miss what's coming up next, and it really helps us keep making these deep dives for you. All right, so we've covered the foundation of this whole thing. Now let's look at what the source calls the next layer being built on top of this system, tokenization. This is where the plan allegedly expands beyond just stocks and bonds and starts moving into, well, everything else. So what even is tokenization? Put really simply, it's just the process of creating a unique digital token that represents a real-world thing or a financial asset. This token then lives on a shared digital ledger, kind of like a digital certificate of your claim to that thing.
And this is really the key development. We're not just talking about financial assets anymore. The source points out that we are literally seeing the tokenization of everything. Whiskey barrels, collectible sneakers, real estate, even trees. It's expanding incredibly fast into the physical world we all live in.
And look, this isn't some fringe idea cooked up on the internet. The source highlights this quote from BlackRock CEO Larry Fink to show that some of the most powerful people in global finance see this as the future. The end goal, they say, is to get every single asset onto one of these digital ledgers.
But this brings us right back to that fundamental question of ownership, doesn't it? If you hold a token that represents your house, do you actually own the house, or do you just own the token? The source warns that this is just another, more advanced form of security entitlement, where your claim can be legally separated from the actual physical asset.
So let's get to the final section here, the alleged endgame. What is the ultimate point of this incredibly intricate legal and digital framework that's supposedly been built over all these decades? This slide lays out the predicted sequence of events. First, some kind of major financial crisis is triggered. Second, the secured creditors use the safe harbor laws to instantly seize all the collateral, your stocks, your bonds, and now all those tokenized assets. This, of course, results in a massive legal wealth transfer. And after the dust settles, a new system, like a central bank digital currency, is offered as the solution, the consolation prize. The source material uses this really powerful analogy to describe the sheer scale of this event. It's like sweeping the Monopoly board completely clean. In one single move, all the properties, all the little houses and hotels, all the assets are just wiped off the board and returned to the bank. The game is then reset, but under their total control. And what about that consolation prize? The theory warns that what would be introduced is a central bank digital currency, or a CBDC. And unlike the cash in your wallet, a CBDC could be fully programmable and trackable by a central authority. This would give them unbelievable control over how, when, and even where you're allowed to spend your money. And so, this entire theory really leaves us with one final and pretty unsettling question. When everything you think you own, from your retirement account to your home to your car, is just a digital claim held by some faraway intermediary, what do you truly own?